Good morning, everyone. Rise and shine. Welcome, everyone. Thank you for a precious morning to join us the sessions with UOB Asset Management today. I'm Andrea Chan. I'll be the host for today. Today, we are presenting The Awakening of the Dragon, presented by Mr. Edwin Lee. Just a little housekeeping before we get started. If you have any questions during the presentation, please type them into the questions in the chat box. I will bring them up during the presentation. And we will have some time for the questions at the end. Without further ado, we will turn the time over to Mr. Edwin Lee. So our presenter today is Mr. Edwin Lee. He is the Chief Marketing Officer, joined in UOB Asset Management in 2018. As you know, he is very familiar in this industry and is kind of well known. So kind of lengthy of biodata over here. So yeah, without wasting any time, I'll pass the floor to him. So Mr. Edwin Lee, the floor is yours.
Thank you. Okay, morning everyone. So I believe most of you can see the slide. If there's any hiccups on the technology, anything on the technology side, just feel free to put in the chat group so that my colleague can actually help you to overcome it. Right, so this is a second quarter update. I think you all have seen how we have updated on the first quarter, and technically this quarter is quite important because I believe some of you who have seen, or most of you could have seen, the volatility in the China market could actually express a lot of concerns. So instead of sharing a global outlook with you, I will actually now I prioritize the Great Dragon update so that you are more give you a sense what is happening in China. Right, on the next slide, this will be today's agenda. I will, it sounds a bit funny. Normally, we always start with a macro perspective, then only we talk about market. But this time round, I just want to be very straight to the point. I will first and foremost, I will just address the key thing that concerning you. That's about the A-share market, what has happened to the A-share market that caused the volatility that we have seen. Then I come to the macro, and of course, the strategy updates, which also will answer some of your questions that we have been seeing in the last 2 months. Okay, next slide. Let's start with A-share. Right, you have seen the last 1 year performance. A-share has not been, I mean, it started quite well, but since after Chinese New Year, you have seen that it was quite a sharp sell down, right? In after Chinese New Year, right? So on 1 year basis, just to share with you, as of yesterday, 1 year basis, A-share market, or we rather use CSI 300, okay, as a more reflective of this fund's performance. CSI 300 is up for about 29% for the last 1 year. So if you look at it, it is not really up a lot, right? 29% for any market for recovery, that is not really up a lot. Okay? So that is something that I would like to share with you. And clearly, very beginning, I'd like to share there is no bubble, right? There is no bubble, which there's a lot of myth for saying that there's a bubble. I'd like to emphasize there's no bubble in China market at this moment. Right, let me just share with you the next slide, which is the causes of the market volatility that I've seen, especially after Chinese New Year. There are three main reasons that I can highlight over here, right? Other reasons that I don't highlight over here, just feel free to ask, right? Which is why some of the things that I don't highlight over here, because I don't think that was the reason why it caused the volatility. But what I'd like to share with you, these three reasons. First thing, the rally has been extended since April 2020, so probably it's a good time for some bit of correction. Second one is actually the higher US 10 years Treasury, right? It's a very sudden spike. Everyone knows it doesn't only affect the China market, but technically across all the high growth sectors, especially the tech related. And third thing, a lot of concern about the tightening of the Chinese regulator. Okay, let's go for the first slide very quick. If you look at the first slide itself, it actually performed quite a strong rally ever since. It bottomed at around 20th of March 2020, and at a point at an index of about 3,653. As of yesterday, it's about 4,900 odd, right? So yeah, so therefore, it's not really rallied a lot, as I shared earlier. So, but having said that, ever since the bottom in March 2020 and it rallied up to February, that actually it makes sense for people to start to take a bit of profit, right? That makes sense. Okay, so therefore, I'm not surprised there will be. I mean, you saw some consolidation happening in the market. However, having said that, if you look at on the chart on your right hand side, the table on your right hand side, what over here we use S&P 500 to compare with CSI 300, right? What you notice is that in terms of EPS growth, it is very clear that the China market is very strong in EPS growth, right? And if you look in terms of the valuation itself, China is not too stretched. And how you actually interpret it, you use a PE against growth as a valuation to see which one is cheaper, which one is more attractive. And it clearly to show to you in terms of PE growth itself, CSI 300 is still looks more attractive as compared to US, right? But however, having said that, you might ask question, if you look at on your table on your left hand side, you will notice despite the rally that is quite close to each other between S&P 500 with CSI 300, why does China come down? Why does China market come down, yet the US market continue to power on? The simple logic and the simple reason to answer you is China cannot print money like what the US can do, all right, without having inflation in the country, right? So that is what to share with you. China cannot print money. That is a key point. Next slide. All right. And over here, what I would like to share with you is actually in terms of the US Treasury. I think you can look on your left-hand side, the bar chart, the chart that shows to you the spread between the 10 years China Treasury yields against the US 10 years Treasury yields. Ever since the pandemic started, the spread started to go up. Why? Because you keep cutting interest rate on a very aggressive manner, while China on a gradual basis. So therefore, you have seen that the spread has been getting wider, right? And of course, when the spread getting wider, it's also attracted some money into the equity market, okay? But what I would like to share with you is that as of, especially after the Chinese New Year period, you have seen the spread actually started to come down. But what I'd like to share with you is that the spread narrowing has actually been very drastic. And you know very well in market doesn't like volatility, uncertainty. All right, when you have this kind of uncertainty, it warrants them to actually concern, and therefore you have seen why the market has been so down. Okay, so and also not only that, not only China, like I shared with you, even other global technology tech market has also seen a bit of profit taking, right? That is what causes the volatility. And the third reason that I'd like to share with you is the tightening by the Chinese regulator. There's no doubt that China is ahead of almost every single country in the world when it comes to this round of a cycle. When you've seen the recession, they are the first in, first out, especially coming from the out from this pandemic. So when the world have second wave, third wave, and Malaysia, we are also talking about fourth wave. You have not heard about the first, second wave, not even the second wave in China, right? So that's how. Just give you a sense how well this country actually has controlled the pandemic, right? And therefore, because they are the first in, first out, the world is also taking ahead, see what will be the next things that's going to happen. And the whole world knows the next things after this pandemic is over, the world is looking ahead of a potential inflation, right? So therefore, there will also be, the highlight is actually on the Chinese central bank, if they are starting to take any tightening measure. So what happened was when the central bank tried to drain out a bit of the liquidity from the banking system itself, it created some panic that the tightening started. But what the Chinese government, Chinese PBOC has come to step up and to ascertain the market that, there will still be on a prudent monetary policy. it's not going to be a drastic change, but very much on a prudent manner. So that is what the Chinese government is trying to give assurance to the market. Next slide. I'll share with you in terms of the PEG growth, the PEG valuation. How about in terms of price to book perspective? So over here is very clear to show you, very obvious to show you in regards whether it is from price earning growth perspective or even in terms of price to book perspective. China is definitely, especially CSI 300, is definitely looks more attractive in terms of price to book as against the peers like US market or even Asia ex-Japan in this manner, right? On the next slide, to address the concern about the bubble in China, especially what people were so afraid of the recurrence of 2015, right? Over here, there is a table to compare with you what happened in 2015 versus what we are seeing today. Three things I'd like to highlight over here. Why are we insisting that there isn't any bubble? First reason, the first row was telling you that how much has the market performed in 2015 versus now. The market has up 112%, right? Back in 2015 as compared to today, which is only 27%. So clearly, that is not the extreme rally that you have seen. And the last three row, let me just share with you, last three row, liquidity channel. Everyone knows that Asia has been very dominant by the retail market, by the local people who investing into it back in 2015. But what you are seeing is that gradually, since 2020, the government has been encouraging more of these retail investors moving away from participating to the market directly, but rather via things like unit trusts, right, mutual funds. Okay, and therefore you are starting to see that the participation in the A-share market has started to see a fair bit, or I would say quite drastic, sharing on the market from the institutional, like mutual fund, the fund managers, right? And the next point that I'd like to share with you also is on the economic activities. Back in 2015, the PMI or even the retail sales, okay, are starting to decline. But today, all these indicators, all these economic indicators are improving, and in fact, is doing very strongly than even compared to the previous months. I think the latest data that came out is very obvious that you have seen things are doing superbly well in China. Next slide. Okay, this is a slide just to reshare with you again. The participation of the institutional funds has been increasing in China. All right. Therefore, what does this story tells you? What does the message going to tell you is that market in China are slowly going towards the fundamental approach, right? I think retail. When it comes to retail is very much a herd mentality. They just follow as according to rumors. But when it comes to more and more institution that is participating in the market, so fundamental do matters. So which is what I'm going to share with you today, more about the fundamentals of the economy or even on the strategy itself. Next slide. Right. Other than the institutional coming from local perspective, you are also expecting the institutional coming from abroad, especially that you have seen that gradually or for surely that you are seeing MSCI will be keep increasing the China A-shares index, the China A-shares weightage into most of the global benchmark in MSCI itself. Next slide. Okay, I'm going to go to the macro. That's a bit on the A-share market. Hope I explained to you the volatility, the reason of the volatility, the temporary volatility that you see in the market. And let me just share with you on the fundamentals perspective in terms of the economy, whether things are sustainable in China, which is a lot of people have concern on that. Let me start with the first one. Premier Li Keqiang, during the twin meeting, which just ended 1 or 2 months back, couple of things that he has mentioned, which doesn't take very well by the market. Let me share with you why it doesn't take very well in the market. When a lot of the rest of the world have very high expectation on the growth in China this year, okay, Premier Lee actually played down that, right? He's just saying that the GDP growth target is above 6%, right? Is above 6%. And that caused the market to panic. Hey, we expect more than that, you know. But what he actually re-emphasized again is that the word is above 6%. All right, it could be 8, it could be 9, it could be 10, it could be 12%. That is still above 6%. So meaning nothing below 6%, right? That is what he keep emphasizing. And the second thing that he actually emphasized is that even at 6% GDP growth, this is a giant that is growing at 6% GDP growth. Last year, the GDP of China reached 100 trillion yuan. 100 trillion yuan or renminbi value, the value of Chinese economy, which is equivalent to 15 trillion, which is very close to US now. US is about 21 trillion. It's about 15 trillion in China. That is very close already. What he wants to tell you is that at a 6% GDP growth, the growth itself, the value added to the economy itself is already equivalent to 6 trillion renminbi, which is equivalent to 918 billion US dollar. Just the additional growth itself is really 918 billion. And for those of you who you know, we can't sense how fast is the 918 billion, just to share with you, it's almost a creation of 3 additional Malaysian economy from China. Just for the growth itself, it's already created 3 economies, the value of Malaysian economy in China alone at a 6% pace. So that's how fast this giant is growing, expected to grow, especially this year. And why does Premier Lee, Li Keqiang, actually specifically just say 6% and not higher? The sense in the market is that there is a likely that they're trying to shift or adjust the growth within China. When the pandemic hits, you know, you have seen that the government trying to get the banking system to create liquidity into the banking system, you know, therefore encourage spending, especially things like consumer spending, for example. And what you see is that what he noticed also is that the liquidity somehow doesn't flow to the small businesses, the SMEs. Just like Malaysia, SMEs are playing a very important role in China in terms of jobs creation, right? So therefore, what they want to do probably is very likely that what the market is believing is that they want to rechannel all this liquidity from the big corporations, the consumer side, instead of that moving towards the small and medium businesses. That is why it cannot grow. They do not want to be promising a very high growth, but rather adjusting the growth momentum towards the rest of the left out sector. Next slide. Right. So therefore, what you are seeing is that IMF insists that China will grow beyond 8% this year. All right, and it just came out even after Premier Lee has said that, you know, is only targeting at above 6%. IMF insists of growing at around more than 8% for 2021 in China. And I think yesterday's news on the GDP growth of China that grow year on year for the first quarter, that grow year on year on 18% itself, will probably tells you, you know, a growth of 8% looks more likely to happen in China than just 6%. But then again, just to reemphasize, Premier Lee is saying he's not wrong. He still insists. He's saying that it's above 6%. Okay, next slide. PMI wise, in terms of services, in terms of factory, I think I don't have to tell you from the mainstream media, from the paper itself, you know things are doing very well in China. Next. Okay, and this is what I'd like to emphasize to you. If you look at the bottom chart side, the bar chart side, you are seeing that the loan growth has been very significant, especially in 2020. And despite the general growth in the whole, in the entire loan in China itself, one particular sector that's growing very strongly, which is the household. All right, the household side, the debt on the household side, that is growing faster than the national average, and that alarm a concern. So that's also probably people are saying, that could be something, the term called revenge spending, right? So I think you all know, 2020, during the Chinese New Year in 2020, while we were celebrating in Malaysia, China was having lockdown, right? The whole Chinese community in China was locked down. So therefore, when open up again, it's like a Hungry Ghost festival. Everyone is robbing for spending in China. We just had a call with Ping An a couple of days back. What we were told is that I'm not sure you all know, Hainan is actually a duty-free zone, right? And in Malaysia, if you go Hainan Dao, right, the Hainan Island, you don't really need a visa, right? You can actually fly in anytime you want. So, like I said, duty-free. So what happened was that we were told by our colleagues in Ping An that practically every single shops that you go, especially the branded stuff that you go, the shelves are always empty, right? They can't replenish fast enough for the consumer to grab it, right? For the buyer to grab it. So that's how crazy they are spending, right? So which is why the term revenge spending happened in China. Okay, and for that also, you also see probably the debt has actually also escalating in China. Especially you also start to see that they are, because of the so much money being printed in US, so you know that the raw materials cost has gone up, commodity prices is very obvious, the other one, and therefore they also expect the property, they also invited a lot of punting on the properties. So therefore, we have seen the increasing loan in the household, especially coming to buy on the mortgage side. So which is government is trying to curb and try to control, especially on the property side. And the other thing that concerning China is also from the youth, especially. Although I'm not a youth anymore, but during the lockdown period, I believe most of you could have encountered like what I have did. I've never spent so much money in the e-commerce last year as compared to the last at least 5 to 10 years accumulated, right? So, during the lockdown, especially, we have been nothing to do. You can't do shopping, you just shop in the e-commerce. And it's so convenient that sometimes you don't even realize that you spend it because it's all debited to your credit card. So, and that created a lot of debts among the youth. And that's also something that the Chinese government is aware about it, and they're trying to control that particular bubble. Next slide. I will share with you the next things that maybe it's not a concern to the rest of the world, but it's really a concern in China, that they are really foreseeing that imported inflation. In terms of the money that's printed in US, well, I admit to you that I've lost count, right? You really got to ask Federal Reserve to tell you how much they have printed. I can't recall. I've lost count about that. But when you have so much money being printed in US, we have to accept the fact almost all the country in the world will soon face something called the imported inflation. And that is something that the Chinese government is monitoring, the PBOC is monitoring very closely, right? So, which I think is good. Before any bubble created, they already start monitoring, which I think is very good, is warrant that. But then again, the government or the PBOCs have been keep re-emphasizing there won't be a immediate term in terms of the monetary policy because China did not print money, all right, during this particular recession to bring the country out of this recession. They did not print money, so which is something that because they didn't print money, so they didn't warrant. It didn't require China to have a very stringent or immediate tighten or immediate change of monetary policy in China. So that is something that is highlighting it. So as a conclusion for this one, let me just share with you in terms of the market itself. First thing is that it's not end of the bull in China. All right, it's not end of the bull. Okay. Second thing is that fundamental and the growth in China is very well intact. Things are very well intact. They are still rebounding. Okay, it's not end of the story yet. It's still rebounding. So, but what is happening in the market is like I'll put this particular analogy. For those of you who is Chinese now, right? We all went for Chinese dinner, right? We all went for Chinese dinner. So for those people who entered the Chinese dinner, you are served with a lot of food. Only at the end you are served with dessert. And many of the time you will notice that a lot of in this Chinese dinner, the dessert always been left out. A lot of people, you can't fit in any more dessert because you eat too much. So think about it. Instead of you can't enjoy the dessert, why not after all the main dishes? You just go out for a walk, take a break, and come back for the dessert. Okay, so that you really can enjoy the dessert. So that's exactly what's happening to the market now. You have eaten a lot. The market has went up a fair bit, 20% in the last 1 year. Okay, so now China is taking a walk to digest before they come back with the dessert. That is what analogy that I want to give it to you on China market. Right. Next slide. Okay. This one, I think, even though if I'm not shared with you today, I believe you are gonna bombard me with this question. What will happen with the friction that you are seeing? The Cold War. I wouldn't say any more trade war, but it's really the Cold War between US and China. Right. Let me just take the first article. That is a summary done by the Malaysia newspaper, The Star. You see, I have to be fair. All right, I have to be fair and neutral because I cannot extract. I don't want to take any comments coming from China because it's going to be pure pro-China. If I take something from US, commentary from the Western media, very well it's going to be pro-US. So I took a neutral stand. I took our local paper, which is The Star, right? So you all heard about the Alaska face-off, US-China Alaska face-off. So of course, these things really shocked the world, the entire world, especially the American, which don't expect that they have the China that really stand strong against what being done by the US, because traditionally it's not normal for Chinese to behave in such manner. Chinese has never behaved in such manner. I think the Confucius taught them to be always humble, stay low profile, stay humble, but this time around they really stand firm, right? And that also created a lot of people believe China is more confident now that they are on an equal footing with US, is no longer below, right? That is what being said. And this is being quoted by The Star, not me. So it's a fair quote. And of course, according to The Star, is that this particular face-off, won applause globally, okay, to China, especially those traditional US enemy like Iran. Right? They were quite happy, finally there's a country are there to stand up and instead of being a yes man to US, they really fight back. Okay, so that's actually well received by many of the American enemies, right? So, and because of that also, many people many economists, political analysts has also starting to believe that China is already preparing themselves to be number one. Right? So on the next slide, okay, again, I'm telling you, you all know that probably I'm very pro-China, so I don't want to quote myself. I always quote someone else, and I bring quotes that I'm bringing out is all very neutral, right? I quote Malaysian paper, and also this time around, I also quote something that is coming from this gentleman. I love this gentleman very much, the way he commented. It's all Kishore Mahbubani. So for those of you who know him, he is actually a Singaporean, and it's obvious he's an Indian, right? Not Chinese, Indian, and he's from Singapore. And Singapore, is tend to be more pro-US than China. You know that. And why I quoted what he said is because this gentleman is actually a very well-known figure in the global arena. He was, other than credentials you can read, but what I like to highlight is that he was a presidential of the president of the United Nations Security Council for 2 times in a row. All right, that's how the credential that he has. So what he actually mentioned, a couple of quotes over here, even back in April 2015 in the Harvard University. Yeah, what he was saying is that why China, what is the goal of China to emerge as number one? The first thing is quoted, China leaders have no intention to conquer the world, but what he wants is to revive back the Chinese civilization, right? I think you all know Chinese has a long thousands of years of civilization, but somehow these civilizations got muted, especially in the 19th century, right? Where they got a lot of humiliation, they suffered a lot of humiliation back in 1842 to 1949, right? And what drive this Chinese leader to so determined to become number one is actually they do not want to be humiliated again, right? They do not want to humiliate it again. And the last thing that is quoted by Kishore Mahbubani is that, and this is very funny, is the assurance coming from an Indian and Singaporean, right? He was saying that the Chinese leader has no desire to prove the superiority of the Chinese communist ideology. They are not, unlike the American, which is promoting democratic to the rest of the world. China has no desire to promote communist ideology. All right. All they want is just that they do want to re-promote Chinese civilization and no more humility. Right. Again, I'm very neutral. I don't quote quote from China. I don't quote any quotes from the Americans, but it's rather a quote from Singaporean Indian. Next slide. All right, again, this one very hot topic that a lot of people has been asking me about the digital yuan, right? Next slide. Okay, first thing, let me just highlight this particular point. Digital yuan is not another cryptocurrency, all right? Don't bet on it like what you bet on Bitcoin, Ethereum, and any other cryptocurrency. It's not a digital currency. It's not a cryptocurrency, right? The intention of having digital yuan, all right, or they call it the digital currency, electronic payment, okay? The intention is actually to replace the paper money and coin. The paper money and coin used in the market, used in China, all right, or across the world. The unique thing, what differentiate between digital yuan and your current WeChat Pay and Alipay, one of the key thing is that your WeChat Pay or your Alipay requires data in order for it to function, okay? But the digital yuan, you don't need data. Your phone don't need to have data to use digital yuan, right? That's the first thing. And the intention of the PBOC or the Chinese government to come up with digital yuan, a couple of reasons. The one that has been highlighted is, first thing, it will have a better control in terms of the money circulation in the country, right? Because just one button itself, you know how much money has been circulating in the country. That's the first thing. And of course, the second thing is that it's more hygiene, especially after the pandemic. You have seen the PBOC has been sanitizing the paper money, but now if you're using digital, it's more hygienic, right? And of course, the third thing is also that corruptions and money laundering has been an issue in China. And even, of course, during President Xi Jinping term, it has actually reduced substantially. But then again, you cannot deny that it could happen again. It could happen rampant again. By having digital currency, digital yuan, you can really contain the money laundering, right? And then what about WeChat and Alipay? All right. just to share with you, WeChat and Alipay are also moving towards digital yuan. They are also moving towards digital yuan, something that you probably heard about it. But why do PBOC come up with a digital yuan despite they already have e-wallet? Okay, the key reason why is because Alipay and WeChat Pay is still a private company. It's a private company. It's not owned by the Chinese government, right? Therefore, in order to drive a really paperless money, right? Paperless money, the Chinese government cannot enforce that all the merchant must use WeChat Pay or Alipay because it's not a legal tender. It's not a legal tender that approved by the central bank of the government of the country. So therefore, this digital yuan, which is issued by the PBOC, the Central Bank of China, right? They can actually enforce it because it's a real legal tender. So therefore, it really promotes, it really expedites even the digital currency in a more faster manner. Okay, that will be the first phase that what you will see happening in digital yuan. And the second phase that that's really on testing now, you will see very soon is that sooner or later, digital yuan will become cross-border. All right, cross-border meaning across the world, as long as you trade with China, you have to settle in renminbi, then you can use digital yuan. Now, currently, the cross-border transaction, the clearing system has been testing around in Hong Kong, very obvious, then UAE and Thailand. The three countries already start testing the digital yuan on the cross-border usage of it. Next slide. All right. Little bit towards on the politics scenes over here, and I quote this gentleman, which is known to be one of very successful U.S. president, Bill Clinton. So just to quote here, what he said was back in 2003 in one of his speech in the Yale University. What he basically said that the U.S. is the biggest and most powerful country in the world now. He mentioned that. But if you believe that we should be trying to create a world with rules that follow rules, right, that have partnerships and habit of good behavior, we would like to live in, when we are no longer the military power, economical power, and the superpower of the world, then you wouldn't do that. You wouldn't do that, meaning you wouldn't break the international rules, right? So what he actually was trying to say, he already, in a way that he already starting, this gentleman is very, he's a very brilliant, all right? He's a very brilliant man. I think he already foresee US is towards number 2, all right? He has to really, the US should start to prepare themselves as world number 2, okay? Because in terms of population wise itself, it really tells you cannot sustain as number 1. Okay, in terms of the growth itself, it really tells you China is coming up. So he wants to prepare US to be number 2, but then again, I was told for what he quoted here, to admit for any US president to admit to be prepared to be number 2 is actually something called political suicide. So therefore, what you notice is that this word has never been mentioned again in US. Next slide. Right, again, I quote Kishore Mahbubani. What he said is that, the world is using US dollar as a reserve currency, all right? Because very back then, the credential of the US government, prudent monetary policy actually makes people love the dollar, love the US dollar. But what happened is that, just imagine that, you have a central bank across the world, you have been accumulating the US dollar. But what happened was it gave a shock to the world when in 2018, the Fed announced QE, right? So QE means the US easily print the US dollar. So as a global reserve currency, and when you keep printing it, you actually make the currency lost its value, right? So, and of course, all these, the rest of the world governments who have the reserve in US dollar, starting to question the US, hey, how sustainable is your US dollar? So, but for the fact that they keep printing, even to today, they keep printing, US is telling the world is that, it's our dollar, but it's your problem, all right? So, and that created doubts to the world on the US dollar, right? And to share with you a little bit further on some of the history, back in 2012, right? US actually prosecuted a few foreign banks, and one of the bank is actually, I don't want to quote the name of the bank here, but I rather put the word bank as, which is a UK-based bank, right? They were fined US dollar 314 million by the US government, right? What happened was they just did a transaction with to move money, to transfer money from somewhere in Asia to Iran, right? But a lot of people don't realize, technically this particular bank, which is domiciled in UK, has not broken any British law, right? You are UK company, but they didn't break any UK law, and they has not even violated any United Nations Security Council sanction, right? But just because of the clearing of the banking system needs to go through the New York clearing system and come out, okay? The US dollar actually entered into the US territory, all right? Which they claim it as extraterritorial application of domestic law. And by using this particular law, this bank was fined, okay? And and that is what we call the SWIFT banks. The SWIFT system is a system for you to transfer money, but the SWIFT system is actually in US, right? And what happened is that sad to say that the American politics, American leaders has actually starting to use the SWIFT system as bilateral relations. A very good example, they actually threaten countries that they don't like, that they will deny this country from accessing to the SWIFT system, meaning these countries cannot trade with any other countries, cannot send money out to any countries. So this is what happened when you are using the dollar system. And what is being mentioned by Kishore is that he said, in many ways, the US policy is unwise, right? Because it's actually undermining the institution, undermining the rules that has been created by them. Meaning they created the rules, they are the one who break the rules, right? And if US were to settle themselves one day as number two, and they do not want the number one to exploit this kind of rules to treat them eventually, what they should do is that, what the Americans should do now is that they should behave, they should be disciplined, all right, to follow the institutional rules that are set by them, not to be broken. Because how China will behave as number one, how they're going to treat America when they become number one, is how America behave as number one now. That's why it's been quoted by Kishore. So, I've talked many times about my love to renminbi. I think I've already told many of you many years, decades now, that hold a bit of renminbi, as one of the assets. And this time around, I do not want to quote anything from myself. Again, I'm being neutral. All right, I'm being neutral. I've never used Chinese people to quote. I'm using some foreign people. There's nothing related to China or Chinese to quote it. So now, after saying thank you so much about renminbi, so you decide. You decide whether you are, whether you want to fall in love with renminbi, right? So that's on all the macro that I've shared with you in terms of even on renminbi. So now back to the fund, the strategy that I will share with you. Hey, let's start with the investment strategies. With you. Okay, I think time is quite limited. I will just very fast go through what are the investment strategies that we have with you. Just to reemphasize, the strategy doesn't change a lot. We still continue to look for innovation team. We continue to look for innovation team. Whatever I share with you in the first quarter is still very much remain intact. I will go with the first slide, the next slide. Okay, this is the investment process. I'm not going to bore you with that. Next slide. All right, something that a lot of us might not aware. This is a study done by BP Energy Asia, as well as a lot of universities are doing this study. What they believe is that 40 minutes of the energy projected by the sun itself can meet the whole world, 1 year of annual energy demand. 1 year of the world energy demand. So just 40 minutes alone of the sunshine can meet the one whole year of the world demand of energy. So that shows you how powerful of the energy that we have not been harnessing, right? Which is the next slide that we share with you. When you talk about solar power, obviously you have to talk about photovoltaic, which is where you're gonna harness the sun energy. The research has shown to you that the cost of solar energy is coming down rapidly. All right. In fact, anticipating by in the next 30 years, the photovoltaic, the cost of solar energy would drop further by 70%. Right. And because of that also, because of this reason, even as of now itself, solar power is even cheaper than you burning coal or burning fossil fuel to actually generate power. All right, solar power is very cheap now. And of course, it's most cost effective. And obviously, because of towards carbon neutral, solar power is very clean. All right, it doesn't hurt the atmosphere, right? So it's actually a very clean, it's a clean energy. So, and because of that, there are more and more belief that, especially in China, research done by BP, they're saying that they are expecting this industry demand for photovoltaic will increase tenfold, yeah, by the year of 2030, which is 9 years from now, right? So therefore, you probably will see why this kind of the photovoltaic producer, you know, their business, they don't worry about the demand. They're only worried about cannot make it time to supply. All right. And just to share with you, 90% of the world photovoltaic manufacturing is actually in China. Right. So there are a lot of opportunity to buy into this kind of company. Next slide. Right. Most of you have heard last year, despite the pandemic, China has overcome extreme poverty. All right, they have overcome extreme poverty, but they still want to, even despite overcome the extreme extreme poverty. In 2021 onwards, President Xi Jinping has also given his promise to elevate poverty. So there are no extreme poor now, but they are still poor people, right? And China will be working towards eliminating the poor, meaning they do not want to have poor in the society anymore, right? If you believe in that, that is something that you should look into, which I'm going to share with you in this this particular strategy. Next slide. Right. What happened is that in China now, the government has been spending money to build solar panel. You know, solar panel, if you build solar panel, you need space, right? You need space. You need to put up the solar panel. The setback is that if you build this solar panel in the city center, in the tier 1 city, land is very expensive. You can't afford, all right? It's too expensive. The opportunity cost is simply too much to build all this solar panel. And what the Chinese government did is that they go into the villages, right? I think we all know the poor people are the farmers that stays in the suburb, in the village, all right? Less developed. So these are the poor people. So what they did is that they built the solar panel over there, right? The money made from this solar panel is shared with the farmer, okay? And the rest will be used to actually continue to build more solar panel to the rest of the China, to the rest of the villages. And the statistics study shows over here, the extreme poor people earn less than $2 a day, less than $2 a day. The extreme poor Chinese people, right? But because of this initiative, right, this initiative to build solar panel in the farm places, okay, all these villages has increased, their annual average income has increased, okay, from $2 a day to $30,000 a year. $30,000 a year. So that has actually increased the lifestyle, increased their income and elevate them from poor, right? $30,000 a year actually is quite a lot. Yeah, you're talking about what, 120,000 ringgit a year. So which is what the quote saying here. China is collecting energy from the sky to create prosperity on the ground, right? That's what they are doing. And the next slide will tell you, by doing so, by harnessing solar energy itself, technically China is using one stone to kill not 2 birds, but 3 birds. And what are the 3 birds? First one, poverty elevation. I've shared with you how they actually elevate poverty via this solar panel initiative. Next, better food yield. All right, this one is something unique. A lot of people might not realize. A study shows that if you prevent your vegetables or your crops from direct sunlight, it will enhance the yield of those plants or those crops by 2 to 3 folds. All right, so by building all these solar panel on the farm itself, you actually shield all those veggies, all the crops from direct sunlight, and they actually created better yield on the plants. So therefore, you actually create a better food yield in China, right? Not only that, even in terms of the livestock, in regards whether you are talking about a chicken, the likes of chickens, your sheep, or even, for example, the fishes, right? The picture on your left actually share with you, they are building the solar panel not only on the ground, but also on the sea, all right, on the seashore. The reason why is because by building this solar panel on that, you actually lower the temperature of the ocean, and therefore it created more plankton, which is a fish food, and therefore the fish will live healthier and bigger. All right, so therefore by building all this solar panel, it also created better food yield for China. And the last one, the third bird that is killed, is actually for carbon neutral. So just a very brilliant way of managing it is really one stone killing 3 birds. So what will be the prospect of solar panel in China, at least in the next 9 years, right? So you decide. Next slide. Right, I will share with you some of the structure of things that's happening in China. These are the studies done, yeah. First one, Chinese consumers are willing to pay 20% premium for any premium products. They are willing to pay higher price as long as the premium products, right? So you can sell higher price product to the Chinese. They are willing to pay, right? Because all they want is quality. Second, almost 67% of luxuries Chinese consumer are post-80s generation. Too bad I'm not post-80. So what they are trying to tell you is that these are already the, not up and coming, already the spender, right? These are the young spender in the market, right? And third point that I would like to share with you, the young consumer who are new to luxuries, half of these consumer only post-90s, even younger, only started in 2017. All right, half of these post-90s luxury consumer only start to taste the luxury products in 2017. So it's very, very new in China. Luxury products is very, very new to especially the youth, the younger generation. So the question to you is that how are you going to take advantage of what you know now in China? Right? Which is the next slide I will share with you. Okay, give a guess. What are the similarities of what you are going to see here? From this particular comic icon to all this picture that is shown over here. What are the similarities? Including this, yeah? Including this, on my hand now. What do you think is the similarities of all these things that you have seen here? Very obvious, all these things are targeted at the younger generations, right? All right, the way it's been packaged, ice cream, older people like me also, I seldom eat ice cream nowadays, right? But it's very much for the younger people. Pocky, okay, you guys know Pocky better than me. High-end tea lifestyle, right? The bottling, the twists between Sprite, okay? What is the similarity? What are the one common thing that you see in all these pictures? The answer to you is these are all baijiu. All these things contains baijiu. All right. So what I would like to share with you over here is that innovation doesn't necessarily means that you have to come from technology perspective. The way how you innovate, how you repackage, how you brand your product is also innovation, especially to capture the market in there, right? So a lot of people has been asking us in the first quarter, I've seen a lot of your holdings, there's a lot of baijiu there, what baijiu got to do with innovation? There's no technology in that. Let me share with you, this is what we call innovation. Doesn't need only on technology perspective. Packaging, repackage, rebrand yourself, to follow the trend, to capture the market is also part of innovation idea. Right. Next slide. We have seen that the world is on rising interest rate, rising yield environment. We are seeing, especially the US 10-year Treasury. And history has shows to you, every time during when the yields goes up, the US 10-year US Treasury yields goes up, right? It tends to benefit a few sectors, especially the financial sectors like insurance, for example, right? And how are we going to harness the opportunity from this? Next slide. Our strategy actually has also extended one of our investment into an insurance company. And let me share with you what's so unique about this insurance company. What are the things that are actually innovation that come up from this insurance company? And let me share with you, although you might not really heard about this insurance company, but this insurance company is among the Fortune Global 500, right? It's among the Fortune Global 500. And second thing is that you and I have been taught, it costs us 5 times more effort to attract new customer than maintaining an existing customer, right? It takes 5 times more effort and more cost for you to attract one new customer. So what happened is that because of this company actually came out with big data analysis of all their existing customers, right? And from what they did is that from all these existing customers, from all the information that they have, they actually used 4,000 different notes, or in a way contact points of every one of these individual customer, 4,000 different contact points to analyze what do these customer need. And they tailor a more personalized insurance package to this customer. 4,000 over contact points, I think you can't really use it as a I mean, if you're a human being, you can't analyze that, but they're using big data analysis to do that. 4,000 contact points. So therefore, they are seeing they are more efficient using to deal with their existing customer, cross-selling more products with their existing pool of customer. Of course, there's another group of agency that they have that actually keep hunting as a hunter. They're hunting new customer, and existingly this big data analysis, okay, that they use to actually keep coming out with more innovative product for their existing customer. Therefore, the penetration rate for every single customer of this particular insurance company is actually higher, okay, compared to the general in the market. And just to share with you, the big data analysis that they are using is actually powered by Huawei, right? All right, so next slide. To conclude my strategy for second quarter, in the first quarter, I shared with you the four different main themes of the investment strategy, be it from technology, consumer, clean energy, biotech. All right, all these things remain intact. But to add additional flavor to the fund, to the strategy itself, we actually add on strategy that benefits from the rising rates, which is the insurance and the bank play, right? So these are the strategies that we actually has been included. Next slide. And we are expecting our call with Ping An. I know Ping An is quite comfortable to say that they are expecting second half, the later part of the year should be a better the market should be performing better in the second part of the year, the second half of the year, because they just highlighted, just by looking into a very big perspective, this is the 100 years of anniversary of the founding of the Communist Party of China, and they will not let anything jeopardize this celebration. All right, so with that, I think I will end my presentation over here. Next slide, okay, which is United Great Dragon Fund. It's a fund that investing into China's tomorrow. Right, so for that, I will end my session here. I will open the floor for any questions that you want to raise.
Thank you, Edwin. We will go ahead and take some time for questions. Now, just a reminder, please be sure to type your questions into the chat box. Hereby, we have uploaded brochures and product highlight sheets of United Great Dragon Funds. Feel free to download it and have a look. So, Edwin, it seems like we have a few questions over here. Hold on. Yeah, a question from Jin Singh. Yeah. So hi, Edwin and Andrea. I would like to ask, as US S&P and other index has hit new high recently, would you feel that for equity portions of high risk client portfolio, China can have a higher weightage as compared to before?
Okay, I just came back from Penang yesterday, and I was Penang doing a public event in Penang. There's this question asked to me. I think I have a little bit of follower in Penang So this gentleman come to see me and say, "Hey, Edwin, you have been advocating China, always advocate. You're very pro China, you know. And why? What makes you talk about global? What makes you talk about global market? Why makes you like global market?" I mean, to be honest to you, I actually do have some of my exposure into our global funds, right? So that is what I learned in my last 20 years of journey. I've learned something about that. Emotionally, I don't have to tell you. You know, I'm very obvious. I'm actually attached. I'm very emotionally attached to China, right? But in terms of wallet-wise, right? Emotionally attached to China, but I also have got to take care of my wallet, right? Okay, so in order to take care of my wallet, I do have exposure into the global fund, which have actually, global fund tends to have a bit more bias to US. And why do I have to invest to US? The reason is very simple, and yet a lot of people might not realize. China, the fundamental, no doubt, the future, no doubt about China. But then again, as we are talking today, there's only one country in the world that can keep printing money and yet don't see inflation. There's only one country that can do that. When you keep printing money, what does it tell you? Money keep chasing after assets like equity. So therefore, if you really pull a long-term chart of S&P 500, no matter how many years you pull, there's only one direction. keep going up, right? Why? It's simply just because of the rest of the world are supporting the US dollar, all right? And you don't see inflation happening in US. So therefore, before China become the Taiko, become number one, right? If you want to really make money, yes, do not leave out the US market. Do not leave out the US market. Do participate in the US market, but then again, never left out China, because this will, you and I already see it now. We are witnessing it now. This will be the next generations to come, right? So Ginseng, I don't give you a direct answer, but I hope you got my point. Okay.
So yeah, this a question from you quite interesting. Like I think Edwin did mentions about the dessert. So like since we are waiting for the dessert, so we switch to other funds before we can come back and enjoy the dessert.
Mr. I don't know whether Mr. or Miss Lu, but I think the answer that I gave to Ginseng give you a bit of a picture, and I think I did mention to you earlier that we are expecting a better market, the broad market as a China market as a whole, especially coming to the second half. So from now to second half, you have another 3 more months to go. So I cannot tell you what to do. You decide. All right.
Okay. Questions from Yun Zikiang. So China fundamentals are very attractive, but I haven't observed large institutional funds investing in China Asia market from more than a month. So what are biggest considerations for large institutions? How to attract these wealthy people to invest in the China mainland market?
Okay. Derek, if you help me to go back to slides 11. Darren, can you help me to go to slides 11? Yeah, no, up. Sorry. Yeah. Yun, over here, we actually share with you how the fund flow looks like in the entire 2020 from Insti. All right. Be it from the unit trust perspective, foreign investment, which is not a lot. Okay. Wealth management product offered by the banks, social security funds, your pension funds, enterprise annuity funds, occupational, meaning your social pension fund, and then the private funds, right? You're talking about trillions of renminbi went into the Asian market last year. Okay, and in 2021, these funds are continue to build up. So, which is also the reason why you are seeing more new unit trust launch in China, because the government actually encouraged the investors to go through the route of unit trust or any other institutional site rather than direct investing into into the stock market. So that probably give you the answer, the color of it. Next question.
The next question from Jason. What is the expected return per annum for this fund?
I think I know who Jason is, this one. He always cornered me into one. Okay, honestly, you know very well, especially now it's live. I cannot commit any kind of return. I mean, we talk aside, we talk about it. But definitely not in a live like now to share with you the expected return. Okay. Next slide. Okay. I think we only have 2 more questions left. Yeah, we go for final 2 questions.
Yeah. Questions from Vicky. So what caused the recent corrections for this fund? Yeah, what is the directions moving forward?
Okay, I think Vicky, you might have came in later. So actually, I shared 3 main reasons of the corrections in the market. The first one is after a long rally ever since April 2020, so it's time to take a breather. So they see some profit taking happening in China. Therefore, there's a first reason correction. Second one was actually due to the US Treasury that's actually hiked, and that actually caused the spread between the 10 years US Treasury and the 10 years Chinese Treasury and the US Treasury to narrow. And the narrow is actually very significant. It was a one line down, right? And you know the market doesn't like uncertainty, a very drastic change. And therefore you see the sell-off in the market, not only on China, but I think for those of you who went to the tech-related equity across the world, you also see the sell-down. So that actually happened. And the third reason is because China is a first-in, first-out country, first entered the pandemic, and first that really came out of the pandemic. My colleague yesterday was like, the 2 days ago in Ping An, it's like a whole group of bunch of people inside the room, all without masks, right? You have that happening. So they're first in, first out, and because they're first in, first out, the world is using China as probably the country to see what will happen next, right? And the anticipation, next thing is going to happen to the world, especially after the economy has recovered, will be the inflation, because of so much money being printed into the economic system. So therefore, any little bit of movement of the central bank of China actually caused some alarm. All right, and there was a time I think in early March, that China actually, the PBOC actually drained out a bit of liquidity in the banking system, and that created some panic that they're afraid there is the tightening starting to take place. But again, the PBOC has actually came out to assure that you shouldn't look at what we do with the banking system to control the liquidity in the banking system as an indication of tightening. You should look at the interest rate, right? So the control of liquidity in the banking system is very much to contain the debts level, especially to the household in China. So this was three main reasons, which we felt is a temporary reason. It's not a permanent reason. It's not a strategic and a real fundamental reason, but rather it's very much a temporary reasons for the market to be volatile, and it needs a bit of cool down before you can continue with your desert.
Okay, we have one more question, which is going to be my wrap-up question. So okay. It looks like we covered all of the questions. So it's like, is there anything else that you wanted to cover before the wrap-up? Like the question from Luis, is there any key things away from this session?
Key takeaway, I think the first thing I'd like to emphasize to you is that I shared earlier to answer with Vicky's question, is that whatever volatility that you're seeing currently is actually quite temporary. It's not really the fundamental. It's not hurting the fundamental. It's not the anything that costs or anything that caused an alarm. All right, it's something that is nature. You need a bit, after going up so much, you need to have a bit of correction. That is all temporary. It will be, times will solve it. Second thing that I'd like to take away is that the fundamental growth are still very strong in China. All right, and just recall, although I didn't mention again today, but just remember, made in China 2025 is just 4 years from now. It's not too far away from now. And I'd like to share with you in my third quarter update on China, I will tell you, I will introduce one more things that's going to happen in China. What after Made in China 2025? China are really prepared. What is the next strategy after Made in China 2025? You will hear about it in the third quarter of my update. So the key takeaway is that fundamentals remain very intact. If you really compare against the US market, why the US market has been so sustainable in a way, keep going up, and China market facing a bit of volatility. The simple answer to you is that China cannot print money like what the US print, all right, without what US did. Okay, that's probably the key takeaway.
So great. Right. Thank you, everyone. We appreciate you being here. Thanks again for joining us today. And we will see you next time. Stay safe and stay healthy. Bye-bye.
Bye.